Amazon stock price is up over 31% year to date already in 2024. That, along with the company's position in benefiting from the growth of artificial intelligence, has a lot of investors interested in Amazon stock. For those of you that are interested in Amazon stock, here are some things that you need to know about the company's latest results so that you can make a more informed decision about Amazon as a long-term investment. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the things Amazon has been doing in increasing quantity lately is developing its own chips for computing. Now, the company needs extensive computing power to operate its business. Remember, it has Prime Video, it has the e-commerce website, it has the AWS segment. So it generates a lot of computing necessity, and so it's developing chips internally to help facilitate those computing needs. One of those chips is a custom silicone it calls Tranium for training and inferencing large language models. And sorry, Tranium for training and Inferentia for inference. So two separate chips, one for training large language models and one for inferencing for the large language model. The difference is training is when you're trying to develop the large language models, and then inferencing is when the large language model is already up and running. For each query that consumers or people put in the search bar, that's inferencing. So those require two different types of computing needs. Amazon has made a chip for each one. The second version of Tranium is starting to ramp up in the next few weeks, and it'll be very compelling for customers on price performance. Of course, NVIDIA has the best in class GPUs for training and inferencing, but they're also the most expensive. So sometimes customers want the lower priced option. They don't need the very best, they just need something, and Amazon wants to fill that gap. They're seeing significant interest in these chips, and they've gone back to their manufacturing partners multiple times to produce much more than we'd originally planned. That's an indication of strong demand. And what I've seen from NVIDIA is they're sold out of their latest generation technology all year long. And so there is significant demand that's outpacing supply in this category. As you can see, Amazon going back multiple times asking for way more than they initially planned. And that just gives you another data point of how strong demand is for artificial intelligence computing for training and inferencing. They're also using Gen AI pervasively across Amazon's other businesses, with hundreds of apps in development or launched for consumers. They've expanded their Gen AI expert shopping assistant in the UK, India, Germany, France, and other countries. And in the US, they're adding more personalization and the ability to narrow customer intent and real time pricing and deal information. In other words, Amazon is not only selling the ability to use artificial intelligence to other businesses, they're using this internally for their own use cases, and they've got a lot of use cases, including the recommender systems for shoppers. If they can recommend you the right product at the right time, it's going to increase the amount of money you spend on Amazon. If you go to Amazon and you don't find what you're looking for, you're probably not going to go back to Amazon as often. But if you keep finding things you like to buy on Amazon, you'll keep coming back because your shopping process is much easier. Amazon has tens of millions, if not hundreds of millions of products on the website. And so the better it can surface the right product for you, the better the business will do. And they're using AI to help facilitate improvement in this segment. They're doing this all while increasing profitability. Worldwide operating income jumped by 56% to 17.4 billion, their highest quarterly operating income ever, and that was $2.5 billion above the high end of what they thought they were going to deliver in the latest quarter. So they gave investors a range of what they thought they were going to do in the quarter. They actually ended up doing way better, 2.5 billion better than what they even thought they could do in the best case scenario for this latest quarter. Additionally, paid memberships for Prime growth accelerated in the third quarter from both the US and globally, and that's helped by their 10th annual Prime Day event in mid-July. Prime allows shoppers to get fast and free shipping on millions of items. It also provides access to Amazon Prime Video and other benefits that Amazon shoppers find lucrative. And so it's not surprising to see growth in this category for Amazon. For Amazon, Prime members tend to shop more often and spend more each time they shop, which is their most lucrative customer base for Amazon to capture. Their North America and international segments each delivered their seventh consecutive quarter of year-over-year operating profit margin improvement. I love to see this from companies where as the company grows, as revenue grows, so does their profit margin. So they get better at what they do and thereby increasing the profit margin. They also benefit from economies in scale and thereby increasing the profit margin. I'll provide you one example. Imagine Amazon already has one customer in a neighborhood. If they add a second customer to order in that neighborhood, when the other customer orders, if they deliver two different households in the same day, that lowers their cost to serve. And so the more customers they add in that neighborhood, the more they improve their profit margin because they're already going into that neighborhood on that day. And so they can make 3 deliveries or 4 deliveries or 5 deliveries instead of just one delivery. And so the more they expand in that way, the more it'll lower their cost to serve. And they have plenty of room, plenty of upside here. This is a business foundationally built on economies and scale. Not every business is like that. Not every business is built on such foundational economies and scale. Some businesses, as they grow, their their profit margins don't improve, they actually worsen. And I've shared with you several examples of companies like that, and some of them I've even warned you against investing in because they're just growing. When they grow, they make matters worse for themselves. Amazon is not that way. They continue to make progress in improving their fulfillment network cost structure, driven in part by improved inventory placement. As Amazon has grown and observed customer behavior, and as customer behavior has settled in, they were able to find the inventory placement that best suits their customer orders. They know pretty much what a customer is going to order and when, especially customers that sign up to subscribe and save, which our household does. We get a basket of items on the same, once every month or once every 2 weeks. And so Amazon knows what we're going to want, when we're going to want it. And so they can place those items effectively for delivery, thereby improving the speed to delivery and improving their cost to delivery. And they've done this in several different categories, and that's driving growth and profitability in both of these segments here. So if you're interested in Amazon stock, these are things that at the very least you should know. There's a lot more you should know about this company, but at the very least, these are the trends and big picture items you should know about. I have dozens and dozens of videos on Amazon stock on my channel. I encourage you to do more due diligence and look at some of those videos before you decide on investing in Amazon stock. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.